All right. Good morning, ladies and gentlemen. Today is Wednesday, August 7th, 2019, and welcome to the Investing Systems Trading Service live show. Boy, there's a lot going on. Lots of things going on. A lot of drama this morning because of bond yields dropping, and there's all sorts of crazy macro stuff going on. So let's jump right in and take a look at the S&P 500. We'll take a look around the markets, and then we'll talk about some interesting things that sort of relate to the service itself. So, as you can see, we've had a pretty good sell-off here, right? And interestingly enough, this is Fed Day, last Wednesday, right? So, I remember last Wednesday morning doing the show saying, yeah, things are going to be dull until the Fed meeting, and they were relatively dull. The prior days to the Fed announcement, where they cut rates by 25 basis points, which was the consensus, by the way. Prior to that, the market had marched up and hit a new all-time high in the history of the world. And what's really amazing about that particular day, and obviously you can see this trend line up here. So what's really amazing about the all-time high in the history of the world there, the high was 3027.98. So call it 3028. If you look at the weekly chart, right? I've had this put this trend line on here a while back, a few weeks ago, and it's uncanny. It's absolutely uncanny how close that trend line sort of fits as overhead resistance, right? Talked about that a couple of times, and just amazing. I mean, it starts back here at the beginning of 2018, right? Basically had a melt up at the beginning of 2018, right? Best start to a year since, whenever I remember, and then things sort of, got nasty pretty quickly. And then it took quite a while to get back up and surpass those highs. So it was last summer, basically. Last summer we hit a new all-time high in September, it looks like, and things got fairly ugly. And so anyway, point here is that this particular trend line is. I mean, you can draw a trend line on there and you can say, okay, well, if the market rallies up to here, it's going to act as overhead resistance. But it's just crazy if I zoom into the daily chart, obviously, which we were just looking at, a few pixels here and there on that weekly chart was going to make a huge difference here. But that's basically where it sort of fits. If I zoom out, I mean, it's pretty close of a trend line. There you go. You can see all 3 points on a daily chart, but just very, very unusual. The more interesting thing, and I talked about this a couple of times too, pointed it out on the show, was that, let me get this back on the Fed day. See if I can do that again. Yeah, so I'm circling the Fed announcement day right there, right? It turned out to be a sell the news event. That's what was sort of crazy about it. But this was the day that the Fed hiked interest rates for the last time, right? And market kind of took it in stride for a few days and then fell out of bed, right? From this high to that low was a 20% correction. Well, we all remember what last fall was like. And then, of course, there's a couple of Fed days I don't have circled here, but it's just interesting that that particular one, this one, they left rates unchanged, right? Somewhere in here and somewhere in here, there was another Fed announcement, basically. Over here, I believe, was when they basically did their 180. Anyway, they left rates unchanged here. There was a Fed day, and literally that sort of marked the high of this run up. Got a pretty big sell off. I have this yellow sort of zone here because it's interesting that this big run up, little dip, and then this is 7.5% basically sell off, and those kind of ended in the same spot. And all of a sudden, I mean, here we are, CNBC did a markets in turmoil special on Monday, right? The markets are in turmoil, but the funny thing is they weren't in turmoil here or here. We're still a lot higher, and it's like everybody's freaking out and there's all this drama, and it's just kind of it's kind of funny because we're still considerably above like these couple of pullback levels. Now, this particular trend line here, for a long time I didn't have it on there. It's very, very steep. This, if you draw a super steep trend line, obviously it's bound to get broken, right? Like you draw a trend line like that. It can be valid, right? Trend lines can be valid, but you end up drawing too steep of a trend line, they always get broken. It would be like if you drew one like that, right? And so, super steep trend lines they can be valid, but if the market just were to trade sideways, a lot of times you break a trend line. Anyway, so I don't know how significant that particular trend line is. If you go to the weekly chart, there's not much else to draw, right? Now on the weekly chart, theoretically, you could draw this and you could look at this upper and lower. And I see some people out there that are drawing it like this, and what you got's a big megaphone pattern, right? So it's hard to imagine the market selling down to the bottom of this megaphone, but you never know. I mean, the thing about it is the market seems to be extremely dysfunctional over the past couple of years, and so when you're in a dysfunctional environment, you never rule anything out, right? You never rule anything out, like the market breaking out here and going higher, but so you can never rule out like a super big meltdown. I'm going to say that I'm going to say that this is a huge support level here. The funny thing is that there's a lot of macro stuff going on, and a lot of different things that are obviously there's the the whole trade war with China thing. And that's what exacerbated this move. And I thought that was really strange timing. So you got Fed Day here, right? And you had to sell the news Fed Day, even though they raised a quarter point. And so I don't know what the market was looking for, honestly, because I heard people saying that if the Fed were to have cut a half a percent instead of a quarter percent here, with the market up at all time highs and that type of thing, then that would have signaled that something was really wrong, right? And so, a quarter point rate cut was basically, I think going into it was like the market had priced it in 100%. So, but the next day, right? So you get that kind of sell the news event because of some things Powell said at the news conference. But the crazy thing was the next day the market opened and it started rallying all the way back up. And I mean, look, this was 4 trading days ago. If you obviously today's just getting started here. So 4 trading days ago, day after the Fed announcement last Wednesday, market was rallying back within I mean literally within spitting distance of a new all-time high. Fed and Trump comes out and says that he's going to add additional tariffs on Chinese goods starting on September 1st, and so for some reason he felt sort of re-inspired to reignite sort of the trade war rhetoric. And maybe that's because he wanted the Fed to cut 50 basis points and they didn't, but whatever. Anyway, so that was quite the nasty turnaround. Quite the nasty turnaround, and then that started this whole sell-off that we've seen here. And then of course, here we are. So this was this was pretty amazing. I'll tell you something really interesting too is that those of you that watch the futures, the overnight lows like the actual overnight lows in the futures. Let me get this right. Was uh, uh, uh 27. Was that right? 27.75. So in theory, and that happened overnight here, right? Like overnight here, um, you had to move all the way down to there. So the question becomes, they always talk about the market retesting the lows, and so we're kind of retesting the regular hours lows here, but the futures lows are way down here. I'm still finding it a little bit sort of unusual that everybody seems to be that the drama level seems to be so high right here when it didn't seem like there was that much drama on this particular pullback here. Now this was a nasty pullback. I mean, it was almost like I said 8%, and it transpired over the course of an entire month. I mean, literally on May 1st was this sort of reversal bar. But when you looked at that at the time, we've seen other sort of reversal bars along the way that a few days or a week later the market just continues its trend. So anyhow, that was a Fed day, which sort of marked the turning point. That was a Fed day, and it's obviously sort of marked the turning point now. So, and then of course, the big thing on Monday was the Chinese pegged devaluing their currency, I suppose you could call it. Like they pegged their currency or something each night, and this and that, and so that's 2 days ago. Everybody was a Chinese currency expert, right? And so now today. This turmoil is being caused by the fact that like bond yields are tanking, right? Which is kind of a weird thing. Real quick, as far as the Chinese thing, back in 2016, it was actually like the summer of 2015. It was there you go. It was August. So this is a weekly chart. August 2015, you had the same sort of thing going on. You had sort of a global economic slowdown, and there was talk of a slowdown in China, and then China like devalued their currency, whatever, and so that caused quite a bit of turmoil. Summer of 2015 is when that sort of kicked off, and then you had a rally, and then it kind of persisted into the beginning of into January of 2016, and then China came out with a whole bunch of stimulus, right? Solved that problem, and then it was off to the races, right? And haven't looked back. But anyway, sort of some of what's going on right now is a little reminiscent of summer of 2015. So um, Oh, and so anyways, there's some crazy stuff going on, but the market just has gotten, extremely volatile here. And the good news, which I'll talk about in a second, look at TLT here. This is I mean, these kind of moves are not normal, right? So people are spooked, and with good cause. I mean, look at the VIX here, right? I mean, the VIX was just sort of meandering along, and in the around in the 12s, I would say. VIX down around 12, nothing happening, and then all of a sudden, in just a very short amount of time here, it's doubled, right? And so, and amazingly, the VIX has spiked more than back in May when we had that sell off. So market's kind of spooked here. Yeah, it's only down 1% here, and the VIX is up 12%. So that's kind of crazy. But so there's talk of currency wars. I want to look at high yield here today. Yeah, this is so as you look around, let's look at the old Dow. Disney, I think we can get that off of there. I don't even remember why I drew that on there, but it looked good at the time. Yeah, I mean, so the Dow is still above these lows here at the beginning of June, and so I think I think, there's a couple of reasons why there's so much drama and everybody seems to be freaking out, even though we're above, these levels. One is that, like I said before, things are pretty dysfunctional out there. We're seeing a lot of weird stuff, and there's a lot of drama in the headlines, a lot of geopolitical stuff. It's clear that like the trade dispute with China is not getting resolved anytime soon. If anything, the rhetoric on a daily basis is starting to ramp up, and so that's kind of crazy because a lot of the rally that we've seen year to date, besides besides other influencing factors, but I mean a lot of the rally that we've seen is was sort of based on there would be positive trade headlines, right? Every time a headline would come out and somebody would say, "Oh, Chinese and U.S. are negotiating on trade deal. The trade deals, should be finalized anytime." I mean, they kept coming out and assuring us that a trade deal was imminent. So, and basically now, the rhetoric is really sort of ramped up, and so that's part of why I think people are starting to get nervous. And then, of course, these 15 trillion dollars in negative interest rates around the world, and currencies, devaluing and the dollar being so strong. I mean, there's a lot of dysfunction out there. And quite frankly, with the VIX as high as it is and interest rates, at these lows and negatives and that and all that, it's kind of amazing that the S&P is held up as well as it has. That's pretty amazing. So, um, here's the thing. Once you start to get a sell down like this, right? And we've seen them before. This is probably, I'm gonna say, like this sell down and this crazy subsequent price action back at the beginning of 2018. And again, last fall, you had your initial sort of sell down for a couple of days here, right? And a little bit of a bounce, and people thought, okay, the worst is over, right? And so when this happens, right? And I mean, this was extremely dramatic at the time. You get these bounces, and people, immediately, a couple days later, like, oh, the worst of the sell-off's over. It was just a sort of a quick one-time event, and usually it's not like that. Typically you get the dead cat bounce, or you get a reflexive rally, that type of thing, and then look out, right? So let me find my. There we go. This is the chart I was looking for. Whoops, no, that's not it. I have. Here's a good one. What I really wanted to point out was the RSI here. So the RSI on Monday got down to 28. Generally speaking, you get that RSI down around 30 or under 30. I mean, you're looking for a bounce, right? So RSI went from, and I mean, it literally, see, somewhere on here, I've got a much better chart. Oh well, maybe this is yeah, this is the one where I have my big RSI, but I have a line chart on here. Anyway, yeah, you can see the RSI tends to move pretty quick on these moves, and so I mean you went from basically overbought, right, and then you got a divergence here. We might have talked about, I think we talked about this divergence, right? There was a divergence from that high to this high right here, but you even made another high. Anyway, long story short, so you get that RSI down around 30, and it's usually time for a bounce, but that doesn't always mean, just because it's down at 30 doesn't always mean that it's a good buying opportunity. Like last October, you get the first dip down there. It took the RSI way down here, and then you just got a little bit of a bounce. Anyway, market was oversold. That's kind of what I was getting at. Market was oversold pretty quick. 3-day move down, oversold. So getting a little bit of a bounce here. what happens is you get these long range days and there's just no way of telling what happens next, right? You have no edge, right? Everybody wants to be, the first one to buy the dip or whatever, and then you could see that yesterday. Obviously, obviously someone was buying the dip, but that crazy overnight low there, and these lows, the market's going to need to build. It's going to need to build sort of a base, figure out where the low is, and settle down, right? Before you have much of an edge. So generally speaking, you like to see. Now there's the possibility of sort of a V reversal. I'm not sure that we've seen the type of capitulation that you normally want to see before you get a reversal, right? I mean, it seems like there's a lot of drama out there. I didn't feel the capitulation on it was a real orderly sort of sell off on Monday, even though there was a gap down, it was significant. And so, bigger picture is the bigger picture is we may be headed down to this zone here, right? Of course, the other thing you can do, and in a minute, I'll get the. Here's the thing: is like I'm gonna talk about the trades and how everything sort of worked out in the trading service, but there's not that much to talk about. You know why? And I know you know why, because there's no open trades. There's no open trades at all, and so here you go. Let's draw a fib from that low to that high, and I certainly I'm not huge on fibs, other than the idea that hey, generally speaking, you can draw some fibs on a chart. They tend to work, and a lot of people use them. And there's probably algos out there that are programmed to key off of fib levels, and so and so it is what it is. That's why I just like to look at them. So when a market sort of reverses from one direction to another, it's always a good idea to look at fibs. And so I'm going to go out on a limb. And so I mean I have no idea like how this current pullback is going to manifest, right? But I'm going to go out on a limb and say that somewhere like there's your 38.2 retrace. This is the move since the beginning of the year, right? And so there's your retracement, 38.2, right? And so I mean, which literally encompasses like this day right here. And so there's your couple of lows that match up. And so this is probably a really good sort of, if we get down there, this is the area where if you got a real washout over the next week or so, end up down here. This is where you'd probably be looking for sort of a capitulation low or something like that, and then that's probably a good buy the dip area. We may bounce here, but interestingly enough, yesterday's bounce kind of came up, to sort of almost act like it wanted to touch the underside of that trend line, but you can see what's happening today. And so the character of the market has changed just a little bit here. That doesn't mean that all is lost. And like I keep saying, it just seems kind of crazy to me that there's so much drama and hand wringing and that the sentiment has flipped so bearish in such a short amount of time. With the market just whoa, like 4%, 5% dip, still above like these two levels, pullback levels of earlier in the year. And so, man, you get down here. If it were to work its way down here, then I think the sentiment and people are going to act like it's the end of the world. And so it's just kind of, I'm scratching my head and trying to figure out, and I guess it's just because of how quickly it's all transpired. So let's take a look at, well, here's the first thing I wanted to look at was the open trades list here, right? And so you guys know there have been no open trades since there hasn't been any trades that have triggered and since this sell-off started, right? No triggered trades, and so that's kind of the idea of how it's supposed to work. And so, if you think about it, if a bunch of stocks had triggered yesterday, then on this rally here yesterday, that would have been a little premature because here you are today. And, some stocks are up, but the majority of the market, majority of the tape is red. And so you wouldn't have wanted to get triggered in prematurely. And so that's kind of how these pending trades work. And so if you look down, the pending trades list is starting to fill up a little bit. You can see that there's some of them that have been on here for a little while, and then there's some new ones getting added, and so this is starting to fill up a little bit. And there's some familiar names on here. Look, you got Microsoft on here, you got Apple, Adobe. Some pretty decent stocks are starting to be on the pending list, but here's the thing: the triggers are really far away now, and that's done on purpose. I mean, that's the way that the system works. Is that this trigger price is going to sort of move down and converge with the price. And so the idea is that when the price, let's just look at Microsoft, right? This price starts to narrow down, right? Like right now, where did it go? Trigger price 141. I'll just use this as an example. This trigger price up here, Microsoft nowhere near 141, right? So what's going to happen is as time goes on, this is going to start to come down, come down, come down, depending on what it does here. Like if it actually, a few more days goes by and it starts to tighten up, doesn't violate this low or whatever, then it's probably going to come down to right there. And then if you get some decent consolidation and the market starts to turn back up, then it could even come down here, right? Depending on where the price action is. And so anyway, when they first come on the list, keep that in mind. When they first come on the pending list, they tend to be really far away from the current price. And then as price sort of settles down, I'm trying to look for a good spot on here. It's tough. It's tough to just choose a random stock, but the idea is that you want when you start to see big long range days, you want the price action to narrow up, and get really tight, and then you start to get that cycle back up, right? So I mean, this trigger price could move anywhere, in this area over the next week or so before it actually triggers, right? And so you don't really want to sort of go by the trigger price. You certainly don't want to think about. You don't need to place orders at the trigger price because these are going to move. These are going to move constantly. Just for the fun of it, let's look at Apple too. 222. Yeah, this is that trigger price is all the way up here at this high. So you've had a crazy move like that. That'll start to come down too. Apple's actually, and that may come down quickly. Apple's starting to consolidate a little bit here at a lower level, but this is still kind of a nasty pattern. And so if you think about it, back over here, it would have been the same sort of thing, right? Like Apple had big run up and then started pulling back, and when it got to like this area, boom, it shows up on the pending list with trigger price like way up here, and then it kind of follows it down, and then fortunately it didn't trigger right there, right? Didn't trigger, and then you got you got that whole, and so anyway, being on the pending list, that trigger price would have followed all the way down, and then you got that washout, and then boom, there's where it triggered. Right? Like it followed it and it triggered way down there. And so when you get this sort of sell off, right? Think about it's a function of price and time. generally speaking, when you get like sort of a spike high and stock starts moving in, the opposite direction, it generally takes a while for things to sort of, settle out. And the worst thing, like you don't want to get sucked into any you don't want to get sucked into a false move, I guess is what I'm getting at. So, anyway, you'll see more and more stocks start to populate this list, and you may see some drop off, right? I want to look at IIPR. Some of them get close, right? This IIPR, I heard there was some lady on CNBC yesterday, and that was like her number one pick. I don't really know much about them, but we have seen this is 106.90. So that one, hey, that one sort of had a sell off, a bounce, kind of, and could potentially trigger. And so that's another thing too. The longer they've been on the pending list, the more likely they are to move towards the trigger price. But yeah, I was talking to Jeffrey. Jeffrey's kind of under the weather past couple days, so he was going to come on. We were going to talk about some stuff, but I have to do that next week. Anyway, he said he wanted me to mention that right now where we sit here, there are some stocks that could potentially, that are pretty close on that pending list of triggering. He said if they do trigger, that you want to get out quick on the first bounce to the target, right? So it kind of makes sense. We're kind of at the look at this. I'll pull this up real quick. So and this is a good example here, right? SEDG just released earnings, so that's what this is all about. But let me see if I can back up. There we go. So here's a good example. This is the most recent trade that got closed. It got closed here on Monday, right? So it's a really good example, right? Stock triggered in, it was going along, everything was great, stops getting raised up, boom, hits the target, gave you two opportunities there, 2 days there, was well above the target, and then you see what happened. It came all the way back down, and if you look on the closed trades here, you see over here that this max move was 10%, right? And the min move was just barely just 0.2%. And so basically what that's telling you is that if you got in at the trigger price, it moved 10% higher up here. But when it actually got closed, if you were just following the trailing stop, you'd just basically had a break even trade. And so going forward, especially based on sort of where we are right now, it's probably not a bad idea if you trigger into one of these trades. You see one on the trigger today list, and you decide to buy it because the next morning it's closed, it's trading higher than the trigger. You want to bail out at the target. It's basically what I'm getting at here. You want to get out, sell quickly at the target because, for one thing, usually August is a dull month. It's the dog days of summer. You don't expect much to happen in August. People are on vacation, worried about back to school and that type of thing. And so August is actually, um, seasonally speaking, August is not a great month, but September is the worst month of the year, seasonally speaking, right? Stock Traders Almanac. And so you know, we got this turmoil here starting in August, and so we got the rest of this month, and then the worst month seasonally of the year to look forward to. So it's going to get interesting, but going forward, I mean, here's another nice thing is like we're basically, we just got through earnings season, right? And so if for some reason this one, if we hadn't had that pullback, if we hadn't had the pullback to hit the trailing stop, if this would have still been open, then we would have closed it. We would have closed it yesterday anyway, ahead of earnings. And so, over the past couple of weeks, um, the majority, I won't say the majority, but a lot of these, a lot of these trades got closed basically ahead of earnings, right? And so there was like AMD got closed ahead of earnings, right? That was a beauty. I mean, really nice. And you can see what it's done subsequently, right? So, oh, I'm sorry. Actually, AMD, it did that low that day tagged the stop. I was trying to remember because I just remember that we were out of it, and then look what happened. Look, there was the earnings reaction. It tanked, and so it's basically down below that whole cycle. So it's going to be interesting to see if this to see if it shows back up on the list. So anyway, hey, when they trigger in, sell at the target. So what I was getting at, my point was, is that this earnings season was sort of a good cleansing, right? Because we closed all these trades ahead of earnings the day before earnings, and here's another interesting thing is that the system basically between earnings and between trailing those stops up on these ones that actually did hit the stop. I mean, these were pretty minimal. Even the minimum, if you had just entered at the trigger price and followed the T stop, the ones that this is the only like full stop out we took. The rest of these are minuscule, and of course, prior to that, we were weeding out some of the weeding out some of the ones that didn't really do anything, but we had some really nice movers on here, really nice movers prior to that, and so everything's kind of reset now. And the system, amazingly, it's got a mind of its own, right? It weeded everything out, and right before this market sell-off, right? The last couple of few closed trades here were on 8.5. And so let's look at like CCK here. Look at some of these closed trades. Yeah, this one, I mean, this, hit the target, came down, hit the stop, still kind of hanging around here. Um, this was the only this was the only full stop out that we've had recently in a while, and when I look at this in hindsight, um, in hindsight, we probably, maybe in the future we'll make some sort of a tweak for this. What happened is that this one happened to be, this is a strong stock, right? Strong uptrend stock. I mean, there's absolutely nothing wrong with this particular name, but what happened is it triggered in over earnings, which is not really supposed to happen. I mean, we take an open trade, we close it ahead of earnings. If a stock's coming out with earnings the following day, generally, and there's been a couple of stocks that have triggered in because they happen to be on the pending list, and then what happens is they come out with earnings and boom, a big gap up like that. And so, the following day it closed above the trigger. But what we try and do, as been explaining for like the last 6 weeks or whatever here, about closing trades and avoiding earnings season. And so this particular one is sort of a special case because the fact that it probably should have gotten weeded out. But that it gets tricky. I mean, when you're in the middle of earnings season, it's fast and furious, and there's open trades and pending trades and triggered trades and all this. And I mean, trying to go through and say, hey, this one's got to come off the pending list because they're releasing earnings tomorrow. Maybe it hit the pending list over here, and then 4 or 5 days later, it's getting ready to come out with earnings. But long story short, so this is the only one that like triggered in, and it did that based on an earnings gap up. And then, of course, it was not able to withstand the selling we've seen recently. So yeah, let's move on. Here's a beautiful one. Arena. We looked at this. You know, ran up, hit the target, tons and tons and tons of opportunity to sell at the target, and then that trailing stop, basically, I just kept, on this one, I just kept moving it up. I do that on a lot of them. So depending on the pattern, sometimes if the pattern is like a sort of a straight march up, it's fun to keep plotting the trailing stop as it goes. And then sometimes when you get a lot of up and down sort of choppy action, like the stop would have the stop initial stop was here, and then it would have moved up to here, and then it would have kind of slid up, and then it would have spent some time around here and here, and so something like this on a sort of a daily basis, I just slide the one stop I have marked up on the chart, and so there you go. This is actually what you want to see is stock hits the target, and then that stop makes it all the way up to the vicinity of the target, and so it's kind of, if you sell half at the target, you can sell the other half at the T stop. So going forward, when we start to see a cycle up here, I'm going to suggest, and Jeffrey suggests this too, that that start that we go ahead and at least for a little bit here until things start to settle out. There's still a lot of uncertainty. Um, Basically, want to sell at the target. So I wanted to pull this up because this is an example of and like I was talking about, if you get in a little bit higher than the trigger price, you can adjust the target to compensate for that. But obviously, this is one that went well past the target, but then the market was in a big uptrend too, right? And so, I wanted to look. I mean, there's a few stocks. Let's see what Roku's doing here. Yeah, Roku, same sort of thing. A lot of what you'll find is that when a stock hits the target, if it doesn't just plow through it and sort of keep going, a lot of times, that trailing stop will end up somewhere. This is another good example. The trailing stop ends up somewhere in the vicinity of the target and gets tagged. So that's exactly how this one ended up too. So, and that's kind of the idea is that if look at that. Here's another here's one where the stop actually made it considerably past the target. So, and I mean, it's a function of our whole system is sort of based on taking advantage of market cycles, right? And so, you get down cycles, and then they take time to play out. That's kind of, you don't want to jump the gun. What happens a lot of times is you get a big sell off, and then you get a bounce, right? Things sort of settle down, and that first bounce, everybody's feeling froggy, and they want to jump in, and everybody's saying, oh, the worst is over, whatever, and then that first bounce sucks a lot of people in, and then you end up making new lows, retesting the lows, and or making new lows. And so that's with the market, individual stocks are a lot more volatile than the market. So these chip stocks were great on the way up, just beautiful. There was two trades here, right? And then you can see how fast things can turn the other way. So there was quite a few chip stocks. Here's one that this is sort of this is not the normal thing, but here's one that we closed it ahead of earnings, and then boy, did it popped on earnings. So for every one of these, you end up getting two that don't do this. So here's something I want to look at real quick. The financials. Yeah, look at the financials. Boy, they have this is XLF, right? ETF for financials. And this thing was sort of going along pretty well, and then really getting hit. Let's look at some of these things. Goldman Sachs, Citi. I just wanted to see. Oh, and so look at this. The regional banks, big sell off. Bank ETF. Wow. So some of these things are pretty nasty. I mean, there's a lot of sectors. Energy is energy is just unbelievable here. right? This energy sector is below like the December lows. I mean, just most people use XLE, right? But the problem with XLE is that it's mostly Chevron, Texaco, and ExxonMobil, and so I always like to look at XOP. But boy, that's oil and gas exploration and production. Man, what a sell-off here. Um, look at the Whoops, I wide. I want to look at the transports here. Transport's not looking so hot, right? That was that was sort of a Dow theory divergence. You had the Dow and the S&P at new all-time highs back here, but the transports were still not confirming that. So it's amazing that Dow theory is still might be valid after all this time. So anyhow, yeah, I mean, not there's not a whole lot to talk about here. The closed trades are what they are. There's been some fairly minuscule stop outs. Like I said, this is sort of well, it is an anomaly because it triggered in on a big gap up after earnings and then just faded. And so, we can debate whether it should have been in there or not, but it ended up in there, and I didn't really notice it until after the fact. But you can see on the rest of these that the trailing stop had made it up so that, just minimal. Like this is like the minimum, right? This is probably a good example. I mean, this BMA made a pretty big move, right? It made a fairly decent move after it triggered in, but then it faded back down. And so, what I was about to say is that there can be. I'm gonna try and find one on here. Um, it's not that easy to find, but let me just explain what I'm talking about. There can be a case where a stock goes up, like it triggers in, right? You buy in, it goes up and it hits the target, and then fades back down. Here it is. This is a good example, I think. Let's see. There's the target. This BRKS. Where'd it go? Here's the perfect example. So BRKS, it triggers in. Your target's at 42, right? It rallies up, goes up 6%, right, to 42 and a quarter, hit the target, right, and then turned around and came back down and hit the trailing stop, which it just was getting to break even around the entry. So let's look at that one, and because I want to point that out. So this is a great example, and look what it's done here. Wow, but this is a great example of how. And I was explaining to somebody just the other day. I was explaining to somebody that he was asking me about the so-called track record, and I said that generally speaking, the way that we have the system sort of showing everything on the closed trades in real life, you're going to most likely do a lot better than what you're seeing on that closed trades table, and this is the perfect example, right? Because I mean, the target's there for a reason, right? If the whole concept of the thing was to like, hey, just buy at the trigger and then sell at the trailing stop, then we wouldn't have a target, right? If that would have been the whole thing. So, I mean, part of like what's built in the system here conceptually is that you get into the trigger, and then at that target, man, you're looking to either sell half or sell all of it at the target. That's why we have it. And so this is the perfect example of where you got triggered in over here, right? Triggered in over here, and then it runs up, hits the target, pokes at it this day. So there's a couple opportunities, to sell half or all of it if you wanted a quick trade. But just say you sold half, and then it comes back down, and and by then the stop had moved up to just below, and so it's basically it's showing on our list here, right here, as one the minimum would have been a small loss, but in real life, you could have had a really nice trade. You say you bought in here, sold at the target, boom, you had a really nice 6% gain or whatever. And so in the closed trades, it's showing like that the minimum was, and the minimum is kind of like is basically just if you followed the trailing stop. If you bought at the trigger, followed the trailing stop, that's the minimum gain that you would have had, in which case this was a minor loss. So, but as you can see, prior to the meltdown, and this very well, I don't know if this was earnings or not, to be honest with you, but I mean, that's, boy, what a meltdown. That just goes to show how quickly things can change, right? Man, that's incredible. I hadn't looked at this particular stock since it got closed, but so there you go, and that's part of the idea. And another part of the idea is that you got the trigger and the initial stop, and I didn't mark all the stops on here. They're probably, well, they're very likely would have been. There's where it actually got stopped. It's very likely that there would have maybe been one more in between those, in between 38.50 and 39.50. I probably just didn't mark it on there because sometimes the chart gets too noisy when I do that. But so anyway, this is basically, and here's another thing too. Like prior to this little meltdown here, that was not a bad chart at all. Not a bad chart at all. You got a lot of up and down action, but basically cycled back up, and hit the high. So, and then target was just below the high. So that was a pretty nice little pattern there. Now, on something like this, I would have kind of expected a little bit of follow through, but of course, this is semiconductor stocks tend to be extremely volatile based on what's going on with the trade war in China. So anyway, all right. So I mean, not a whole lot to talk about. We got all these closed trades, and obviously, you guys have probably the idea of diversification works pretty well because if you latch on to a couple of these that don't do so well. Um, but if you're in enough of them, you catch these ones that have these double digit gains, right? And so you have a few like sort of stop out around break even, and then you catch some of these real big movers or whatever. We caught a good trade in Facebook there. Um, AMD was another standout. That SeaWorld ended up working out good. Let's see what that looks like because I see SeaWorld back on the pending list. So yeah, SeaWorld, that was a beauty. Um, and so, that was one where, hit the target, went way up here. There was a parabolic stop up there. And so and then this is the earnings reaction, right? Like I believe earnings just came out yesterday or whatever. So it's crazy stuff there. Crazy. All right, let's see what the S&P looks like here. So kind of retested these lows here. With this sort of volatile price action here, it's too soon to know what's going to happen here. So, um, I mean, this could have been it, right? Fed day, rhetoric with China, and so a little bit of a sell-off consolidation, and then it's going to be interesting to see if this trend line means anything. I have a feeling that I'm going to be deleting this at some point. So as of right now, I would say that sort of a viable trend line, and so I'd look for the price action to maybe bounce up, test the underside of that. So I see we're getting a little bit of a sort of a rally here today, sort of a V reversal type of thing intraday. Let's look at a 5 minute chart here. You see what I mean? So big sort of sell off, all that drama this morning, and then it started to rally up and get into that gap. Anything can happen here. The weekly chart's kind of nasty, to be honest with you, but I'm seeing a lot of drama for such a kind of a run of the mill little dip here. To be honest with you, right? So anyway, so all you basically need to do here is keep your eye on keep your eye on the triggered today and be patient, right? I mean, there's, you got to you got to be patient in this business. There's going to be tons and tons and tons of trades that trigger, going forward. And so you don't necessarily want to be on the front lines of the dip buyers, right? I think that's why we get so many like sort of crazy V reversals and so many snapbacks is because people are trained to think that, every big sell off you're going to immediately turn around and, and go back to the highs or whatever, and it doesn't usually work that way. You usually get a couple of rallies that suck people in, but for the market to actually carve out a bottom and sort of and consolidate and the ranges to settle down and things to get back to normal, generally speaking, you need some time, right? And so I'm gonna say that I'm gonna say to be gonna be kind of selective, even if a stock triggers in or whatever. Look at the chart, kind of evaluate it a little bit, and be a little bit selective. It would there's a few of these that are getting close. Right, there's a few of these that are relatively QNST, and I'm going to wrap this up. So, gone rambled for an hour here. The funny thing is, my plan was there wasn't much to talk about, right? There's no open trades, and so like this QNST, right? Yeah, you've had a couple of down cycles and a couple of up cycles, and so this thing's it's not an extremely volatile stock, but it's getting fairly close to triggering. So you may see some trigger, right? And then, the idea will be to, evaluate it and see if you think you want to pull the trigger or hold off. And if you do, my suggestion is going to be sell it all at the first target for the time being. And so we'll see how things play out. And then next week, I hope to have Jeffrey on. We can talk a little bit more about that, and we'll have a lot more information. Right, the sell off basically started, right after the Fed meeting last week, and is still in progress. And so, one thing to keep in mind here until that gap down right there, the open on Monday, until the market can move above that open, you're still sort of in no man's land here, right? I mean, and then of course anything below here. So Monday's range is massive. It's no wonder CNBC did a markets in turmoil special. I mean, that was just a massive range. And so inside of that range there is still kind of like no man's land, right? Yeah, I mean, we could rally up a little bit today, and everybody thinks, hey, okay, but sort of based on the what's going on out there, and here's the thing: is like this thing could reverse intraday and break the low. You just don't know. We're in kind of a crazy sort of environment right now, and so until the news cycle settles down a little bit, um, it's probably best to err on the conservative side. And there's nothing more conservative than having bailed out of all of our open positions, right? And having, no open trades. And all in all, so we managed to avoid this entire big sell off. I mean, literally managed to avoid the entire sell off by having all the positions closed. Last closed trade was on the 5th, which was the a couple of them hit the trailing stops on the 5th, so I would say, but the majority, I mean, it was only what, three open trades or something going into the Fed meeting, right? So they all sort of got peeled off ahead of time, and so going back to those closed trades, things are looking pretty good. And now we can just sort of sit back and wait for the next cycle. And as we get some consolidation, I don't know if it's going to end with a spike low, pivot low, or if it's going to consolidate and just turn back up. But when the cycle turns back up, we'll be along for the ride. So, hey, thanks for tuning in. I'll see you here next week.